What's up, traders? Welcome back to another video. So today we are talking about getting back to the basics. We are starting the week today. It's on Monday. As you can see, we're in the Asian session, but for me this is the time I wake up. Now, as much as we are learning every single day in the market, what will sustain you is understanding the basics, going back to the basics. Remember, the market does three things. The market will either move higher, move lower, or consolidate. Right? Now, you want to set yourself or align yourself with the trend, or in the case of a consolidating market, you wait for it at the extremes. Now, we are selling high and buying low. So, whatever instruments that you trade, the basics are the same. We sell high, buy low. Now, today we are just exploring the basics. We have our high of the day. And we have our low of the day. Okay? Now, let us use this day as an example. This is the high of the day according to the open. And say you are trading the New York session. High and the high and the low of the day. You can have very specific rules. You only take trades at the high or at the low of the day, regardless of where it forms. If the market is not at the high or at the low of the day, you are not trading that market. Right? And that will be your edge, because now, of all the instruments that will be at the high or at the low of the day, one will give you a textbook setup. Right? Now, when you look at this day did not give you any setup. Now, say you are trading the London session. This was the high and the low of the day. The market breaks out. This is a breakout. So, if you are trading breakouts, that is good. If you are looking for reversals, because the best setups are usually pump and dumps. Look at this setup. They come higher using the elevator or using the stairs, and then at the high of the day they pin, then they give us they break structure, and then they retest and give us an engulfment. On a larger scale, this is the pump and dump that we trade on the lower scale, because the market is fractal. But the point is that you are sticking to your rules. You are sticking to your edge. Right? Because if you don't have an edge, if you don't know what restricts you in the market, then there is no way you are going to make money consistently. Let's look at this day. this was the high of the day, of the open. Now, as the market continues, as the day progresses, the market will expand. Now, say you are trading the New York session. We have our low of the session here. Now, keep in mind that when you see a fast moving market like this means there is an initial balance here. Well, I don't know if I'm using the correct word, but there is this gap. There is this gap here where the pump began. So, guys, when you see the market moving pushes, they are taking people higher and higher and higher. But eventually they will fall. And you see, if they fall again like this, then they've given us a new space for the market to come and get the money. But when it moves like this, it moves, then clears the money. Moves, clears the money. Moves, clears the money. Moves, clears the money. Then there is a very high probability that the market will continue lower and lower and lower, because they are clearing everything. Alright? The basics. This is the basic of the pump and dump, where the pump began, then boom. So your target should be around the first pin here. Let's look at another example. Now, this is an example of a consolidating market. What do you do in a consolidating market? You wait for the market at the extremes. So, if the market comes to the high of the day, it's not a must you sell or buy. It's not a must that you sell every time the market's at the high. But it's the price action that tells you what the market might do. So the market comes, gets rejected in one push. Or the market comes in one push, two push, three push to the high, then breaks structure, then a retest and an engulfment. And then keep in mind how the market has played out this. We have a gap here. So this might be a very good scalp. Right? Now, look at the way this market pushed up. When you go to the 1 minute time frame, it is exactly what has happened here. This is the pump, 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 dump. This is the pump, 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 dump. Then pump, 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 dump. Pump, 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 dump. This is a dump, 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 pump. Look at the way it has formed. The basics of the pump and dump. So guys, as the market, this week as the market progresses, have an edge, know your edge, know when to sit on your hands, because it's not a matter of making sure that you trade every setup that the market gives you. It's a matter of trading high probability setups that will give you the highest chance of building your account. Alright? One more thing. If you're not making any money, then this is not a job. This is a skill. So, one thing that I know will help is remove the desperation of wanting to make money in Forex first. Get a side hustle. So say you are trading only the New York session. That means you have free time to work or do something that makes you more money, so that you don't depend on Forex. You build your skill without any restrictions. And with time, you'll build that confidence because you're not desperate for the money. Because it's not about the money, it's about the skill. It's about connecting the dots and having a personal relationship with the chart, with everything that is happening. It's something that becomes a part of you. Anyway, hopefully you got value from today's video. Make sure you like, make sure you subscribe if you got value from today's video. Peace out, stay disciplined, stay focused, and may the markets go with you.